Good morning. It's good to be with you guys. I want to bring in Joe Hinrichs, CEO and president of CSX. Joe, great to have you on.
Good morning, Morgan. Thanks.
Okay, so you reaffirmed guidance, revenue ton miles to grow low single digits. What gives you the confidence to stick with that forecast, given the fact that it is this uncertain macro environment right now?
Yeah, Morgan, the reason why we have confidence is because our service metrics are at all-time highs and we're winning business. We're winning share throughout the first half of the year, and that grew in the second quarter. If you look at our merchandise volume was up 3% in the quarter, and our coal volume was up 4%. So we're seeing growth in the core parts of our business, even though intermodal has been soft. That's being driven by our service and winning share in the marketplace.
Yeah, I want to get into the market share piece of this, but first, intermodal, as you mentioned, it has been a big drag. This is the part of the business for railroads that is focused on containers that have a lot of goods that consumers end up buying from retailers that are containers that are moved across the country right now. What do you attribute that weakness to, and is the expectation that that's stabilizing or continues to weaken?
Yeah, remember, intermodal is about half our volume, but about 20% of our revenue. And to your point, we've seen a softening in the international side of the intermodal business. So the things that come from overseas into the ports, then get on rail and make their way to stores. We've been being told by customers that's due to destocking and also some softening in consumer retail demand. The domestic intermodal, which is what moves within the country, actually has shown some signs of life. In fact, in the last quarter, every month we saw improvements, and in late June we started to see improvement, actually growth year over year in domestic intermodal. So we're seeing some good green shoots there, but certainly on the international side, we haven't seen that inflection point yet.
Yeah, we keep talking about the possibility of a soft landing. So just one more macro question for you here, and that is, does this feel like an economy that's slowing down or even heading towards a recession then?
It doesn't feel like it's headed to recession. It's very mixed, though. I mean, we've seen strengths in autos, metals, minerals, aggregates, coal, softening in chemicals, paper and pulp products, and then that intermodal business international that you talked about. So it's very mixed. But we were able to grow based on our service, and we're able to see that improvement. So I'd say it's mixed. I wouldn't say that we're headed, at what we see, we're not headed to a recession. The domestic intermodal business showing some improvement really is an optimistic sign.
But Joe, it's Sarah. Shouldn't it be a lot better now? We've seen the Inflation Reduction Act and the Infrastructure Act and the CHIPS Act and all of that. So much money going into building stuff in America. And I would think that would take a lot of railroad moving and shaking. And I would think actually the industry would be in a much better shape if we're not going into recession and with all that money flowing in.
Yeah, so that's why I think we're seeing mixed signals, Sarah. I mean, certainly auto production's up significantly, but when you look at aggregates, so the infrastructure, minerals and aggregates, you think about all the crushed stone and stuff that goes into making, concrete and those kinds of things. What we've seen softening in are plastics and chemicals and those paper products, a lot of more retail focus. So what we need to see are consumers coming back into the marketplace for goods and items like that. Maybe we'll see that in the fall when we go back to school, but that's where we're seeing it. So you're right, the investment's happening, and you're seeing that in big parts of the economy, but not all across the board. Maybe consumers are spending more on service than they are on goods right now. We'll have to find that out. But we are seeing some signs of life with the domestic intermodal traffic happening, and I'd like to see that international stuff come back in the second half of the year.